Hi, so this video is about premium discount market shift break of structure. Let's start with what is the trend. The trend is a bearish trend. Alright, what do we mean by bearish trend? What we mean by bearish trend is that price is making high, low, lower high, low, higher low, lower high, lower 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 low. Then we have a lower, this lower high, then this lower low. And now we have a structural market structure shift around here, around this particular lower high. We have a break of structure, this particular push by the buyers led to break of this structure and this structure. So we have a structural shift happening around here. So at the moment we have the break of structure, that's where we try to use Fibonacci to map out the discount and the premium section for us to know where price might likely continue. So we have this break of structure around here, so we can map out to this point, but price continued until we have the end of the channel here, the end of the swing here, swing eye around here, for us to have another break of structure which happened around here. So this is the end of the swing eye. Now this particular part is our premium. So always sell at premium. While this particular 25% part is our discount, buy at discounts. So price moved, broke structure, higher low, higher high, higher low, higher high, then it now broke structure here again, where we now came to test. It broke the fair value gap, the fair value level at 50%, and it came to test the discount. And you can see tap here where we have this hammer, this particular hammer, and the buyers came in, the price started going up. So the idea is allow price to break structure first, which is what happens here. A break of structure, also a break of trend line. Allow price to break both the structure, which is allow market to shift. The market shifted from bullish to from bearish to bullish around here. The moment you have that, start to plot your Fibonacci from 1 to 0. All right, expecting a retracement to the 25% Fibonacci level. Okay, the moment you have the 25% level being tapped, watch what happens around here. First of all, you allow trend, allow break of structure, then allow another break of structure. Like we have the second break of the opposing break of structure here. This is the opposing break of structure where market also shifted. You can see our price shifting here. So the moment you have this, plot and expect price to bounce at the discount 25% level, then you write the retracement. So that's for buying scenario. Selling scenario, price rising. Okay, where we have a low, high, high, higher low, lower high, higher low. We have higher high when market shifted to the upside, and then we have this higher low, and then we now have this higher high. Okay, before we have this low, then we have this lower high. Here buyers were expecting price to go up, but it failed, and then we now had a lower low. So at the point of having a lower low, all right, we already have a break of structure here. Just like we had a break of structure here, now we expect price to give us a break of this trend line, because the moment we have the low, lower high, lower low, we already have a trend. It might be a small trend, so we'll be expecting price to break structure here. The moment price breaks structure, we plot the Fibonacci from 1 to 0. All right, then we sell at the premium. Look at the sell here, it wasn't effective, but look at what's happening here. Another sell, like a comeback sell. So we expect this sell to go down. It might come to this level, but it may, for the current situation is that we already have another break of structure. That's the current situation. But right now price is selling in the sense that this high, higher low, this is a high, this is a higher low, and this is a higher high, this is a higher low. Okay, before we had the range, then we now have a higher high. Now we are having a lower low here that shows our break of structure. All right, so the moment you have a break of structure, all you need to do is your trend line from 0 to now. The trend line we drew was from here, this retracement. Okay, and for this particular trend line we drew was from here, this retracement. And for this particular one, until the retracement, as the price is going, we expect the price to, let me take it again. For this particular trend, we plotted on the retracement. For this particular trend, we plotted on the retracement. Okay, now for this particular trend, we will plot on the retracement. Okay, the retracement must break structure before we plot. Now for this particular trend, the retracement is not complete, but we expect the retracement to get to this level before we plot. So once we plot, we expect price to come to the discount for this particular movement. All right, we will allow the retracement to complete. The retracement should complete at the discount level around here. Okay, That's just what we expect. So if the risk manager is going to complete at that level, which is around here. Now for this particular move, we'll now plot on the retracement and expect price to go back up to test the premium. This is a premium. Okay, so at the end of the day, we might have something like a range. Okay, at the end of the day, we'll have something like a range. But what kind of range is this? What kind of range is this? Oh, at the end of the day, we expect price to go down. I expect price to go down. So that's basically what the strategy is all about. Map the, first of all, identify the trend. Plot the Fibonacci on the retracement. Okay, expect price to test the discount level and bounce. At times to test the fair value level and bounce. Then also that turns to a new trend. Map Fibonacci on the retracement and expect price to test, okay, the premium and then bounce and drop. And this becomes another trend. Map the retracement. Of course, we expect the retracement to get to this level. Then plot Fibonacci on the retracement and expect price to get to the premium. So it's about discount, premium, until price pushes in one direction. That's what the video is about. Thank you.